You have been told that the secret is a new setup or a smarter indicator. Yet the traders who last are the ones who treat execution like a pilot treats a checklist and a surgeon treats a protocol. Strategy draws the map, but the map does not fly the plane. What moves your equity curve is the boring part that gets ignored in most tutorials, the act of doing the same correct thing under pressure without drift. Markets reward the trader who can install constraints and keep them active while the screen is loud. That is the discipline edge, and it scales while cleverness does not. Here, you are going to learn a practical system to turn discipline from a vague idea into a repeatable operating rhythm. We will replace slogans with procedures, replace mood with pre-commitment, and replace impulse with verifications you can perform in seconds. Before your next session, write a single page that defines your maximum risk per trade, your daily loss, stop, and the exact words you will say out loud that trigger a stand down when those limits are hit. Place that page next to your keyboard and keep it visible. This channel exists for behavioral precision and for turning rules into muscle memory so that your map can finally be used by a capable pilot. If you want results that outlive the latest indicator, begin by mastering the checklists that keep you from drifting when it matters most. You have been trained to think that the perfect entry erases the need for discipline, but the market punishes that belief because the outcome distribution of any setup is messy in real time. A strategy is a map drawn from historical terrain, while your live session is the aircraft in shifting weather. The map can point to a route, yet, without a pilot's checklist, your odds of drifting off course rise with every spike of adrenaline. Traders add indicators, time frames, and confirmations to feel safer, then break rules at the first jolt of stress. The core mistake is treating precision as something produced by analysis rather than by constraint. Indecision blooms when your brain is asked to improvise under risk, so you must remove improvisation before the bell. The fix is to design execution the way a flight deck designs procedures. Start with 2 gates that every trade must pass. The context gate asks whether the market conditions that power your edge are present today. Define them ahead of time using a short set of observable facts such as trend state, volatility regime, session structure, and scheduled news. If the context score fails, you do not hunt entries. You wait and scan. The trigger gate activates only after context is valid and the setup appears. Here you verify a small set of on-chart conditions that allow or deny the order. Your chart becomes less of a canvas and more of a control panel with a few switches you flip in sequence. Then, you add one more layer of protection that most traders skip: a pre-commitment rule. Decide the exact line that cancels the idea before you see price approach it. Write it on your chart and speak it out loud so your working memory is not searching for reasons to move the stop. This is how you transfer control from emotion to procedure. Constraint is not a cage. It is a skill that produces repeatability. In medicine, protocols reduce variability, so outcomes converge around competence rather than mood. In sport, practice plans reduce noise, so execution survives fatigue. In your trading, constraints protect the strategy from you. Build a micro-verify ritual that takes less than 10 seconds at the moment of action. Say entry condition confirmed. Stop is defined. Position size matches plan. News window clear. Execute now. If any item fails, you abort. That sentence is not for motivation. It is a motor program that narrows attention and prevents last-second edits. Track 2 numbers this week to prove the point. Track rule adherence percentage across all trades and track average decision latency from trigger to click. If adherence is below 90%, reduce your playbook until it rises. If latency spikes on losers, your gates are not automated enough. Build a pre-flight briefing each morning that forces 3 commitments in writing. First, your context score that rates trend clarity, volatility, and calendar risk on a simple 0 to 2 scale for each item. Second, Your session, mission statement, that defines the single condition that earns risk today. Third, and your abort, phrases that you will say if the environment degrades, such as liquidity gaps or platform issues. Perform the briefing aloud to prime the motor pattern you will use later under pressure. Then place the sheet within reach, just like a checklist on a yoke. This is how the strategy trap ends. You stop trying to be clever at the edge of risk and start being consistent before it. Markets do not test your knowledge under calm lights. They load your nervous system with uncertainty and speed, then demand a decision. When price moves fast, your body shifts into a survival mode where heart rate climbs, breathing shortens, and attention narrows to the most vivid thing on the screen. Working memory shrinks, which is why rules you wrote an hour ago feel distant in the moment of risk. This is the psychological physics of trading. A force hits the system, and predictable reactions follow unless you install counterforces that are simple, repeatable, and quick. Loss aversion pulls you to avoid small, certain pain and accept larger, uncertain pain, which is why stops drift. Action bias pushes you to click, so the discomfort of waiting goes away, which is why you chase. Recency bias makes the last outcome feel like the truest signal, which is why a hot streak breeds oversizing and a cold streak breeds hesitation. The fix is to convert each bias into a small procedure that runs before your hand moves. Start with a breathing reset that you can do while watching price. Inhale through the nose for a count of 4. Exhale through the mouth for a count of 6. And repeat 5 cycles. This extends the exhale, nudges the nervous system toward calm, and buys you a few seconds to verify rather than react. Pair the breath with a micro pause protocol. When a trigger appears, lift both hands off the mouse and keyboard. Place your palms flat on the desk. Look at your checklist, and whisper the gate line, entry conditions confirmed. Stop defined. Size, matches, plan. Calendar window, clear. Execute or stand down. If any item fails, you do not negotiate. You abort. 4. Loss aversion. Create a stop pledge that is rehearsed out loud before the session. The line you will honor is written on the chart and on paper. And if price prints that line, you close without edit and immediately log the event code, stop honored. 4. Action. Bias. Schedule waiting as a task. Use a visible timer and mandate a 3-breath pause between the signal and the click, unless your plan states instant execution. 4. Recency bias. Keep a rolling page of the last 10 trades, with rule adherence marked yes or no, and keep it visible. You will look at adherence before you size. Add a kill switch that triggers on state, not emotion. 2 consecutive rule breaks or 2R down in a session triggers a stand down for 30 minutes with screens on but hands off, followed by a rebrief before any new risk. Anchor the state shift with a physical cue such as standing up, stepping away, and drinking water to reset posture and tone. These moves seem small, yet they are engineered for speed, because your brain under pressure needs short scripts and clear boundaries. You cannot think your way out of a surge of adrenaline, but you can breathe, pause, verify, and act within a narrow channel that keeps the aircraft stable while the weather shifts around you. Emotional neutrality is not the absence of feeling. It is the skill of letting the market pass through you without pulling your hand off the plan. And you build it the way a professional builds any. Repeatable action by installing cues, scripts, and boundaries that run the same way every time you face risk. Begin by defining neutrality as deliberate non-reactivity at the point of decision, which means you do not argue with the chart. You do not chase relief, and you do not search for extra confirmation when the plan has already specified enough. When a valid trigger appears, you follow a simple flow that keeps cognition inside the rails you chose while calm. First, you acknowledge the trigger and look for the exact line on the chart that proves the idea wrong. Then you check that your sized risk matches the plan and, that the calendar window is clear, and only then do you place the order or stand down. If any part of that verification fails, the action is aborted without negotiation. To help your body cooperate, run a short, neutral reset that takes less than half a minute and can be done while watching price. Sit tall with both feet flat. Let your jaw unclench. Soften your gaze to include the whole chart. Breathe in through the nose and lengthen the exhale. And quietly label your state with a single word, such as calm, alert, or tense, so the prefrontal cortex is invited back into the loop. Follow that with a brief, verbal cue that anchors execution. You can say, entry conditions confirmed. Stop, defined, size aligned. Execute now. Or, if any item is missing, you say, stand down, and you do nothing. The goal is not to feel nothing. It is to prevent feeling from becoming an extra decision that edits rules in the last second. Build environmental supports that lower arousal before it spikes. Keep your workspace clean. Keep only the instruments you actually trade visible. Reduce brightness during fast moves. And set your chair position so your shoulders stay relaxed. Install a micro cool-off for moments when emotion rises anyway. If you notice shallow breathing or a shaking cursor, you take 3 slow breaths. You touch the checklist. And you rerun the verify line before you click. Track the habit so it becomes automatic by noting after each trade whether you ran the reset and verify flow. And aim to raise that adherence percentage week by week until neutrality is simply how you operate when money is at risk. Risk discipline becomes real the moment you convert ideas into hard lines that you will not cross in live conditions. And the way to do that is to install a few constraints that are simple to remember and impossible to negotiate with in the heat of action. Begin with a maximum risk per trade that you set before the session when your thinking is calm. Choose a fixed fraction of capital that you can emotionally tolerate losing on a single decision, and write that number on paper and on your platform so it is visible. Add a session loss cap that ends your risk for the day once reached. Because judgment degrades after a string of losses even in skilled operators. Define a sequence break that pauses you after a set number of losing trades or rule breaks in a row so you stop the spiral before it starts. Set a daily stop time beyond which you do not initiate new positions. Because fatigue disguises itself as urgency late in the day, pre-commitment is the shield that blocks live rationalization. You make the choices that protect you while calm, and you bind yourself to them before price heats up. To make this binding practical, create a small card that sits under your hand as you trade. At the top, write my maximum risk per trade is and fill in the amount. Next, write my daily stop is and fill in the amount. Then write, if I breach either line, I stand down and rebrief after 30 minutes. Read the card aloud before you click your first order, so the rule is primed in working memory. Use a position sizing quickline that you can run, without a calculator when needed. Speak it out loud as a short script. Decide the dollars you can risk on this trade. Measure the monetary value of the stop distance from entry to invalidation. Then size the position, so the risk per share or per contract times the number of units equals your allowed risk. If the stop is wider, you must reduce size. If the stop is tighter, you may increase size within your maximum. Repeat the sentence until it becomes automatic, so your hands do not guess size under pressure. Log 2 inputs during the session to reinforce the habit. After each trademark, whether you honored the risk number exactly, and whether you stopped trading at the session loss cap. If either answer is no, the next action is not another trade. The next action is a stand down and a rebrief. This is how risk rules move from a plan into muscle memory, and how your equity stays protected while you learn. Patience is not passive time. It is active control over when you participate, and you build it by making selectivity the default rather than the exception. Begin by shrinking your universe to the conditions that actually power your edge. Then enforce a 2-gate filter in live action. The first gate is context, and it answers whether today deserves your capital. You rate trend clarity, volatility, stability, and calendar risk on a simple scale before the bell, and you do not hunt for entries unless that context earns a green light. The second gate is the trigger, and it only activates after context is valid. Here, you require a handful of on-chart facts to be present at once, so the setup carries enough evidence to risk against. To remove the urge to nibble at everything, pre-tag your playbook with quality tiers and allow risk only on your highest tier until your adherence rate climbs. A no-trade decision counts as a win when context is poor or evidence is thin. Treat waiting as a procedure rather than a feeling. Use a visible timer beside your screen and schedule short scan cycles with a brief reset between them so your nervous system does not chase boredom relief. When a candidate appears but the evidence is mixed, run a waiting ritual that lasts 3 slow breaths, 1 glance at the checklist, and 1 verify line spoken aloud. If any part fails, you stand down and the scene resets without debate. Reduce environmental triggers that fuel fear of missing out by keeping social feeds and unrelated markets closed during your execution window. Allow only the symbols and timeframes you can truly monitor. Define day types you will skip in advance, such as unscheduled volatility, spikes, or liquidity, thins around major releases, and keep that skip list visible. Put time boundaries around participation so you do not force trades late in the session when fatigue is high. To train patience like a skill, track selection quality in a simple scorecard that logs how many candidates you declined because the gates were not satisfied, how many trades were true, top tier, and how many decisions were aborted by the waiting ritual. Aim to raise the share of top-tier trades while lowering the number taken outside context. Over a few weeks, you will notice less time in market, fewer marginal entries, and a calmer mind during scans. That is, patience expressed as design rather than self-denial, and it turns your presence in the market into a deliberate choice instead of a reflex. A losing trade is part of the job. The real damage comes from the trade that follows if you react instead of recover. So you install a recovery script that runs the same way every time until it is automatic. The moment you take a loss, you freeze new orders. Sit back in the chair, place both feet flat, and run 5 slow breath cycles with a longer exhale to lower arousal. Then you stand, roll the shoulders, take a sip of water, and return to the screen with a wider gaze that takes in the whole chart instead of the last candle. Now you debrief in plain language to reduce the event to facts. Was the plan valid under the context I defined ahead of time? Did I follow my rules without edits? What would I do again, and what will I prevent next time? You write 1 short line in the journal with an event code such as plan valid and executed, plan valid and misexecuted, or plan invalid, plus the risk result. Then you capture a screenshot and mark the stop and the decision point so the image can teach you tomorrow. You set circuit breakers that trip on condition, not on emotion. 2 rule breaks in a session triggers a 30-minute stand down. 2 R down triggers the same pause with a rebrief before any further risk. 3 R down ends the session regardless of how good the next setup looks. And a breach of the daily stop ends the day with a full debrief and no exceptions. These numbers are examples you will tune to your system, but the principle is fixed. The switch trips automatically when the line is crossed. Re-entry is also scripted, so you do not chase relief. You only allow a new trade after a brief that confirms. Context is still valid. Your edge conditions have not degraded. Your breathing and posture have normalized. And your last decision has been logged. If any item fails, you extend the stand down or end the session. In the evening, you review the screenshots, tag the trigger quality, and write 1 precise correction you will test tomorrow. Then you rehearse that correction once with eyes on the chart, so your brain has a clean motor pattern ready in the morning. Track 3. Simple signals of progress. No revenge days completed this week. Rule adherence on the first trade after a loss, and decision latency after a loss, compared to baseline. These do not require talent, only repetition. Over weeks, you will notice that losses are contained. Recoveries are calmer, and your equity curve reflects a pilot who follows procedure in turbulence instead of a passenger grabbing at the controls. Discipline becomes durable when you turn it into a daily operating rhythm that runs the same way regardless of mood. So, you begin the day with a brief that sets intent, narrow focus to protected execution windows, and end with a scorecard that converts experience into evidence. The brief is short and precise. You write the market context in plain language using your predefined factors for trend clarity, volatility state, and calendar risk. And you record a single mission for the session that defines what earns risk today. You add a danger list of 2 or 3 conditions that will cancel participation, such as unclear structure or liquidity gaps. And you state your maximum risk per trade and your session loss cap in full view. You pick the one setup that deserves top priority, and you list the few facts that prove it is present, so your eyes know exactly what to look for. Then, you enter the execution window. Treat this as protected time where you close unrelated feeds, silence notifications, and keep only the instruments you actually trade visible. Use a simple cycle of focus scanning, followed by a short reset where you stand, breathe, and check posture. So, arousal does not climb without you noticing. The verify line is used every time a candidate appears, so decisions look identical across the day. When the window ends, you stop and you score. The scorecard measures inputs you control. You mark rule adherence for each trade as yes or no. Count any rule breaks. Note decision latency from trigger to click. And record whether circuit breakers were respected. You write one correction you will test tomorrow. Now, you open the evidence journal. Instead of stories, you capture 3 items for each trade, the context tag that was valid or not, the exact rule you executed or broke, and a screenshot with the stop and decision point annotated. At the end of the week, you scan the journal for repeated triggers of error and choose a single protocol to tighten next week. Over time, this loop turns discipline from effort into default. The brief primes intent. The window protects focus. The scorecard exposes drift. And the journal teaches your future self what to do when the same pressure returns. Confidence that lasts is not a mood you chase after a green day. It is the quiet certainty that shows up when your rules are executed the same way, across hundreds of decisions. Because only then does the math of your edge reveal itself, without the blur of improvisation. The more faithfully you adhere to your constraints, the faster variance stops feeling personal and the faster your results cluster around the behavior you designed. This is why disciplined traders look calm, while others lurch between hope and fear. They are not guessing. They are running a system that converts uncertainty into a series of small binary checks. And over time, those checks produce a stable relationship between risk taken and outcome earned. Your confidence compounds the same way capital does. Each day of rule adherence makes the next day easier to execute, and each clean abort at a boundary makes the next boundary easier to honor. Identity follows practice. You become the person who does what the checklist says because you have evidence that life is better when you do. Today, install one concrete step and prove it. Write a single page that defines your context score, your 2-gate entry verification, your stop pledge, your position sizing, quick line, your circuit breakers, and your end of session scorecard. Place it within reach and run one focused window where you speak the verify line aloud before any order and you enforce the kill switch without debate if it triggers. At the end of the window, log adherence and decision latency and write one correction you will test tomorrow. If you want a ready set of templates to make this faster, download the discipline playbook referenced here and use the checklists as your starting point. Your edge is not a secret pattern. It is the person who shows up and runs this process when the market goes loud.